Doc here from North America. Good morning, good afternoon, and good evening, and I hope everybody is keeping their head down over towards the Ukraine side of this broadcast. Um, let's see what we got here. There's the Swiss this morning. You can see it's moving down against the dollar, so the panic seems to be over at the moment when it comes to just at the moment. Anything can happen in an hour. And let's put that up on there. I'm looking at that same combination. I was just looking at it that we discussed yesterday. And that was the XLF. Let's see, where is it? Let's do this. There we go. The XLF we were looking at yesterday. You know, when someone had asked about Bitcoin, or I went into that tangent about the cryptocurrencies in general, and and started thinking about them. You know how that is really a new asset class, and it's not just a like a currency itself. It's more of an asset class. And I just went on that tangent, and then I thought about, for some reason, I thought about looking at the banking system since it's an alternative to the old classical banking system, and looking at the charts using the XLF, which is the S&P 500 Financial Index. Sure, it matched up enormously well. It was amazing. Obviously, there's some price difference in the sense of all-time highs versus just like 5-year highs type of thing. Whereas we saw all-time highs on Bitcoin at one point in November, and looking at the XLF, we saw something like a 3-year or 4-year high, I think it was. And we'll have to explore that in this webinar today, because I'm hungry to think about it harder. Someone was asking me a little while ago, what are you going to talk about? And I thought, we're going to go through our currencies like we always do, look at everything that we look at. And then from there, jump over to the, possibly like look at the cryptos again relative to the financials and see if there's a tell, if one is ahead of the other. And at times, we have seen that over the decades. I've seen where, I remember when I was young, we were very aggressive stock equity traders in options. Enormous. Had a nice solid group. In other words, 6, 7 traders. We were at all the exchanges. We were dynamic. We were some of the largest traders on the exchange floors. And at the same time, I had drifted over to the currency market. I'd been in and out of the currency market for years, but I drifted over in the early 80s into the trading the Deutschmark back then, and a few other products, in the currency arena. And we spotted increased volatility first come into the currencies in the options, which would kick in first. And a day or two later, we would see it kick into the stocks in the United States. And we thought, well, that's interesting. And I would be watching both of these volatilities and realizing that the currency market would be like the lead. It would initiate action to come into the future. And we were volatility traders, option volatility traders. So we weren't really caring about the direction per se of a product. We were just trading the increase in volatility versus the decreasing of the volatility itself. So it was a really good insight, and it gave us a great opportunity to make extra money, that type of thing. And then when we got into that conversation yesterday, thinking about the cryptos, it kind of struck me. I thought, we need to look at the financials to see how close the two have become related. And we saw, the last 10 minutes of the webinar yesterday showed there was a lot of relationship between the two products, without a doubt. You could see it. And so I think we'll try to explore that again today, see what's going on there. Let's get the Dukascopy and the chat line up off of the YouTube system. And no one's asking any questions at the moment. And I can see and I can hear me, and I see the Swiss. This is good. No one's asking anything. There we go. So yeah, that's the magic of it all at this point. It's a fascinating thing. Now you can see here, just as we watched the dollar Swiss pairs trade, to be able to tell us, are they buying dollars or are they not generally? That's really what it comes down to, is that there's a couple of different products. We used to follow the euro very closely, and in the euro, Mr. Draghi and this quantitative easing has really hindered. I want to use the word hindered, not hurt, but just hindered the growth of Europe even more than before. Because it really catered to those who don't like clean capitalism. And so, they use the government to uh, purchase and define price discovery, or just say not purchase, but just price discovery in general. And, we've heard lots of complaints about that, but no one really seems to pay attention. So we just kind of let it flow along. But that is a biggie. There's no doubt about it. Our price discovery has been crushed, just crushed. And that's how you get the overpriced or the bubbles or all these other things you talk about. Now, currencies in particular have been, I have to say, have been the more peaceful products out of this whole action. And that is really, a really big thing. That we've seen, the level of, I guess you could say, is prices that don't make a lot of sense, but they just keep on going up. They don't, like inflation and so forth. We see the price of increases, and we say, well, where's the earnings? And that's the only thing keeping a lot of the stocks alive, is that they have some really good earnings and they're trading at the high end of the range. Uh, it's just a fascinating thing in general. Traders. I'm a trader, and I like to look at the reality of the marketplace. I think that's the best way to describe it. Anyway, let's get moving along. We'll see if anybody asks any questions, and we'll just check out what's going on. So you can see there the Swiss is moving down, which means the dollar is weaker. And now, obviously, that's the hinky Ashkeys, so it's an average. So you can see here over on the Chicago Quant, where we have the dots instead of the hinkies. You can see they're red just the same as on J4X here, and you can see the line rolling over, meaning the product is heading down. Same thing as we have here. This is the daily side of it, and that's a daily right there at the bottom on the J4X. And you can see the weekly has drifted underneath the zero line, so the pressure is on. And we'll see, they've been playing the top end of this range for a couple months now. Maybe they'll play the bottom end finally. I guess with the geopolitical situation right now, you would assume it would be kind of a little bit tighter and quieter market until that clears. There's the Russian Ukraine situation calms down, or ends more likely. And so I'm sure that it'll be just a tight market at this moment in time, in a tight range. All right, let's take a look at the euro. Euro has shown some interesting strength here again. Where are you, euro? Let's find you. Right there, there's the euro. You see, it is moving down against the dollar. In other words, it needs to go up. The Swiss pairs trade, when it's going down, it means it's gaining against the dollar. There's less Swiss needed. Whereas this, as you notice, the symbol is euro dollar. So what happens, it's the euro looking at the dollar. If it was the dollar euro, it would do the same thing as the Swiss. In this case here, we have some green dots. Let's put it up on J4X too. Right there. You see all that red there. And you can see we've been battling the last couple of days in a green dot, trying to get going up. You can see our daily has perked up. You see the weekly has perked up. It looks like they're trying to buy it. But again, I kind of think this is going to do the opposite side of the range. Whereas we see the Swiss going down towards, trying to get down to the center of the range again, and then maybe break down. This is trying to drift around in the bottom end of the range. This is what this area here is the bottom end of the range. And that's the top end of the range. And then the green defines the center point. And so, again, more than likely they'll stay tight until there's some type of geopolitical news that really starts to turn the game around. All right, from there, let's see, what do? We go to the British pound. See what the British pound dollar looks like. Again, same situation. When on a GBP USD, like right there, it means that when it's going up, it's gaining against the dollar, versus the way the Swiss works, when it's going down, it's gaining against the dollar. Because again, it says GBP USD, not USD GBP. That's what it is. You switch those around, and it works the reverse. And what we always try to do here on our webinars, we always try to talk what I call Eurocentric or global-centric, in the sense of always talk about the markets like as if I'm not living here. I'm living, or I'm functioning from outside the United States, because I like to look at the markets like most people in the United States look at markets in a reverse direction. They always look at dollar first, Swiss second. GBP. A lot of time, well, we do follow the GBP USD that way too here, but the rest of them, it's usually the reverse. When we look at CAD, we look at dollar CAD, or in the States, we do see CAD dollar reverse. And so, like we see, we've seen times where CAD is down to 0.50, half a Canadian dollar to the whole dollar. And that's how I try to do it, is always try to look at the markets like everybody else is around the world. All right, so you can see here the British pound. That's me sipping my tea. The British pound, right there on our. Why am I not seeing that? Yes. Okay, we got to fix that. And there it is right there. Let's get the British pound up on there. You can see it's trying to lift up this morning finally, playing with its weekly. We've been in that weekly sell since here, and all it's done is gone. First it went down on the weekly sell, then it went up, and it went down, but it hasn't gone. It only went down to where it started from in this area here, and then it finally broke down because of the Crimea / Ukraine situation, and now you can see it's starting to lift up in here. We'll see. You can see that weekly perking up. You can see that perking up on the daily. And let's take a look at it over here. We even see a little green developing on the J4X today, right there, joining in. And when we see a red and a green on our work, that's indicative, or that's a warning sign that some volatility could be coming along. Usually about something like 70–80% of the time it's right. It says, hey, the trend will get established over the next day or so, and it'll take off in that direction. Sometimes it goes sideways after a day or two, and it doesn't do it. But something like 7 to 8 times out of 10 it does. So that's pretty cool. That's a half-decent index. That's why we always mention it as the volatility warning index. And you see right here, it did that, went into the buy, and tried to go up for a bunch of days. Wasn't very successful in the sense of, it tried, it kept stalling out, trying again, and now we're getting to, I don't think we had another volatility signal for this little slide. It just went into a sell and just broke down, and that was it. That's why we don't base heavy decisions off of it. We just use it as a warning sign. It's like when you smell smoke, you figure, okay, there might be a fire around here somewhere. And that's kind of the way we look at the red and green put together. We know that something is starting to light up. We just don't know if it's going to be big or small. Okay, and at the same time, this is the bottom end of the range, the black line. So, and it seems to have stalled out a few times now on this light blue. These are Fibonacci sequences. Let me just make this bigger for a second. And so these are Fibonacci sequences. So using our math and combining it with the Fibonacci, since the Fibonacci is kind of behind our math, it's not ahead of it. So it's always interesting to see, like here, you can see we're turning up here with our lines, and what's happening is it's stalling out on the line here. The point, what is that? The point, I think that's the 0.26. That's what that is, or 0.23. So it's stalling out on the 0.23. Our math bottoms out, and next thing you know, it's trying to turn up. Now we've broken through the 0 line. And we see that this, as much as it looks a little weak there, we got the volatility signal kicking out. Let's see if it goes after the the 0.38 or the 5.0 again. The strength coming in, especially with the weekly at the same time lifting, meaning that it's showing us that money is moving into the market, more buyers than sellers basically. And as you notice now, it's much higher than the last lows, that low and that low. All right. Let's check the chat line. I don't see any questions being asked yet. All right. Now from there, we jump over to the Turkish Lira. Let's see what they're up to over there today. We usually first look at the dollar Turkish Lira real quick. It seems to be the, how can I say it? It's much looked at, but we find that the Euro Turkish Lira is a much more actively traded product when it comes to accuracy and so forth. So you can see there's the dollar Turkish Lira. A little red there. I know that we were in a sell yesterday in our work. Because I'm looking at the fact check spreadsheet as we speak right now. I just don't seem to put it up over here that much. We can get it up on here. We can put it up there. Right there you can see, yeah, it pushed into the sell yesterday, and you can see it's just a little weak there. And this whole big triangle that we've put up on there. Maybe we should take that triangle, make it white or something like that. There we are. And so you see it's just been trapped in there now since President Erdogan and his government have come up with a new concept of stabilizing the currency and have done a wonderful job about it too. I'm very positive about it. Giving out free puts to buyers of your currency in many ways is an interesting way of keeping investors invested. That's a magical concept. Take investors and keep them invested. And when you do that, you see the better action, and you see more stability, and you see people not disrupting your currency, and you have less inflation, and you have more investors, and it's like just a win-win-win-win concept. And if all it takes is giving out free puts, then you're not robbing your sovereign fund or your cash reserves from your central bank. You're just basically making it a government expense, which is kind of neat. They would have, what would they have? Think about Turkey, how much more money they would have in their central bank or their sovereign fund if they had done this back when they first come up with the concept back in late 18, when the Turkish lira in the dollar pairs trade was trading in the low sixes. I mean, we had to see it go to 18 before they really, decided to do something that they had thought might be a way of stopping things. And it's been a really great idea. You see, it drove it down from 18 in this product, and it brought it down almost to what, 11 or something like that. Where did it get to? It got down to 1027 over a 3-day period, and stabilized in the 13s, low 14. So, wow, definitely a magical concept. I think this could be in many ways somebody out there in the economics side that's working on their PhD should look into this. It is a definite way for solid currency stability to a weak, very weak currency. I think that's the way to describe it. I guess I could say that again. This seems to be a really solid concept, a very financially good concept to a very weak currency in a industrial nation that's having problems, through whatever reasons, policies or natural disasters or whatever. But in the end result is that it seems to have stabilized this currency fantastically. Now let's drift over to the one that we really like to follow, and that is the Euro Turkish Lira. Kind of going with the concept of location, location, location. It is, it definitely is a much more accurate trade product. Probably because there's probably a lot of commerce. I mean, it's right there. It's how many years have they played with the idea of actually joining the European Union, Turkey, and so forth? I mean, that's been a vacillating experiment of negotiations now for 3 decades, maybe something like that. They stalled out under Aragon, but it was a strong drive for many decades to become much more connected to Europe. And when they did create the European Union, Turkey was like one of the first to possibly be a member, but it just never seemed to play out. And so it's kind of nice, when you look at trying to understand the action of the Turkish lira. The euro Turkish lira is, without a doubt, a very good trading tool. Hence, when I say location, location, location. Now here you can see it's been in the sell for 3 days, not 2, whereas dollar Turkish lira is 2. So and not only that, it's in a weekly sell. We did a weekly sell last week, and it's finding a way to pressure itself down. Now there's no doubt, as time goes on, we're going to start to see this action. We just move a little bit further away from that volatility of last year. You can see that was the invasion situation in Turkey, not Turkey, I'm sorry, in Ukraine and so forth, the Russian invasion there on the 23rd. That freaked out the currency, and rightfully so. But it seems to be a nice small little haven to run to. You can see that. The red dots mean that it's gaining value, against the Turkish the euro. So that's a pretty good thing to actually see your currency, do well against other major trading partners. All right, from there we drift our way over to the Canadian. There it is right there, the Canadian. You see that, the pressure on the downside there, which is a positive thing. Let's see what it looks like over on Chicago Quant. Not there. There. There we go. So, from there, we go to, let's see, we go to, oh yeah, you see that. It's breaking down the same way. Now, normally, the Canadian kind of represents gold and oil action a lot of times because they're, they're second largest maybe metals producer in the world. They're, for the size of their country, they produce 3 or 4 million barrels a day of oil. For the population size, it's makes them a major player in the oil market. So we would assume, looking at this, with it moving down against the dollar, which means it's gaining against the dollar, then we would assume that we're seeing strength in oil and strength in gold. And what we'll do is, when we leave here, we check out those two things. And so you can see there the pressure is down. You see that right there, there's the sell. You see the same thing going on here. This indicator is my indicator using a stochastic to smooth it out. That's why it matches up very well against the fast and slow stochastic overall. That's a good way of understanding my work on one level. Because it is a time formula in many ways, and I have a whole new concept of time, so my formula does at least. And that's why when you look at a stochastic, it can match up a lot to my math on this indicator, the gas line 3. And then we use a 0 line. In this case here, it has a range. It goes from 0 to 100. All right. And it's usually only 2 or 3 hours behind my math, which is really nice compared to, say, like a MACD, which is really behind, or a moving average, which is really behind. But you see here, using the hinkies, it matches up to the dots about 68% of the time, which is nice. And it's just a lagging characteristic, but compared to other public indicators, this is definitely a super uber indicator leading, and that's why we call it the Manhattan indicator, or the Manhattan Project indicator. All right, from the Canadian, oh, can we see what's going on here? Oh, anyway, so it'll go like that. Do it? Yeah, there we go, and you can see the weekly with that pressure on it. And we'll see if they start to dip it down and bring it to the green line, that 50 percentile of the Fibonacci balance. What we've done is we've Fibonacci'd the the channel that we believe that these products, all these forexes, are following, and what we've seen over the years, they've been consistently following. And I can actually say years, not weeks or months. They've been trapped in ranges now. You know, it seems to be some type of manifestation of quantitative easing, where the currencies seem to function inside these big channels. And we've seen our own, I mention it all the time here, we've seen our U.S. Treasury, you know, our Ministry of Finance in the United States, we call it the U.S. Treasury, actually define who is manipulating their currency and who is not. So that says a lot too. Obviously, they do have some way of measuring a foreign currency against, we're not sure what, we assume obviously dollar, of course, but they have some way of measuring it. So obviously there is a channel, or they wouldn't announce if someone is manipulating or not. They wouldn't care. They would be saying, you know, the Swiss is, you know, 6 weeks now roaring to its highest spot or lowest spot. They wouldn't be complaining and actually talking about, you know, complaining to their central bank if they weren't controlling or forcing some type of channel or envelope or however you want to refer to it. But it's obvious there's something going on, and we've seemed to have caught pretty much the whole range of it over the years now. Let's see, what else can we say about that? I guess that's enough. Let's jump over to, what we'll do is we will leave the Canadian up on J4X. Leave that up there. That didn't work either. What's going on here? I hate when it does that. There we go. We'll leave that up there, and we're going to jump over to the metal and oil. We'll do that off of Chicago instead. So there is crude oil trading at, you know, I don't know, was that 5-year highs? 14. Let's see, 14 now, and 6 and 2, 8-year highs. We see oil trading at 8-year highs right there. You see we're a couple days into the buy here when it comes to the front month, April. And at the same time, let's take a look at gold. Gold, not as aggressive. You can see from the invasion situation on the 23rd, you can see gold got up to about 1958, basically 57.8, or just rounded out to 58. And you can see here we're trading right now at 1919.1 as we speak. So you know, it's moving up, but it's not at its what was that? I think that was like a 4-year high or something, or 3-year high right there. So we're not seeing that yet again like oil, but it is moving, that's for sure. It's definitely moving in that direction aggressively. All right. From there, what we do is now we jump over to the South African rand, especially with after looking at gold. If gold is gaining in value, normally the rand is gaining against the dollar. Let's take a look and see. And there it is right there. You see a lot of green there the last couple of days as gold had been going down from that big spike. And let's see how it looks on Chicago. And let's see, right there. In this case here, you can see it's dropping underneath. You know, it's up a little bit from yesterday. We're a little disappointed thinking it was going to try to turn down. You see they keep on flirting with trying to get into the weekly buy and stalling out. And we keep on thinking that, you know, we've seen them make these lower lows now, you know, from that low to this low, to this low, to this low, now to that low, and then to that low. And we're making lower highs too at the same time. So as long as they keep on doing that, we have to keep on believing that we're going to see it play around the 15 range. Let's see what else can we do here, right there, like that. You can see it's, you know, since gold had gotten weak, the South African rand went up and lost value against the dollar. Now that gold is moving back up, you can see it's been moving down. Not very aggressively, of course, just kind of nonchalant, I guess you could say it is. You know, in other words, it's not pressuring itself that hard. All right, from there, let's see, where do we go from there? We go over to the ruble. Ruble seems to have parked itself up in the over the 100 mark now. Got up almost as high as 1.8, almost 120 yesterday. We saw even a panic trade Sunday night of 171 in like just a interbank market situation that we were stunned when we saw it. We thought that's crazy, and who knows, they might have gotten rid of the trade, but some poor somebody ended up selling rubles, 171 of them, just to get a dollar. It's like, wow. You can see here really, I thought that maybe we'd see the 120s, 130s at best. So you can see here 118 and change seems to be the high at the moment, the all-time high. And it seems to be sitting and parked in that 100 area as we speak. So until these guys figure out what they're doing, I understand that yesterday's negotiations, Russia with Ukraine, all Russia wanted to talk about is Ukraine's surrender. I don't think that's going to go over too big with the Ukraine people. So that as long as they keep on playing games like that, I guess we're going to see incredibly strange prices for the ruble. And as one who's been a big fan of the ruble for a long time, hoping that it would get their government going in the right direction and their economics moving along with the right direction because of all the resources and the educated workforce and everything else, we're always disappointed when we see a ruble that's even remotely away from the 45-50 area. We think that it has great potential, but with this type of leadership, they're going through their early Aragon era of watching the currency go from I think when Mr. Putin came in, the currency was in the 15s or 20s. 22 years. Where was it 22 years ago? Let's see what it shows on J4X. Where was it 22 years ago when Mr. Putin took over? These are just simple, basic ideas, like, you take a look at policies and so forth, and I guess you're looking about back to 2000. Let's see, what's there? There's 2006. The ruble was in the 20s and the 30s. Now it's at 118. So Mr. Putin's 10 years, I would say, he's helped along the ruble to move up much higher rates, or let's say reduce its value enormously. So it's gone from 20, 15 in that area to 118. So it's whatever policy he's got going on, it's definitely not good for the ruble, that's for sure. And I guess he'll have to figure that out the way Mr. President Aragon did, who has done a fantastic job of stabilizing his currency and making it look a lot more functional. You see here is another day of no trading on Dukascopy. They're probably having problems just getting the currency itself to be able to transact it. Whereas over here in the States, I understand they have 650 billion in reserves, the Russian Federation, and I guess they own 4 or 5, like at least 400 billion in U.S. bonds. So that means we have a lot of ruble floating around. So I don't know if they're really parked that much into the European Central Bank or not, but I know that for a fact they are parked enormously here. So, and I know they've been trying to convert it into some type of electronic yuan, which sounds like a personal joke to me. I can't even imagine wanting to put your life savings in China. Yeah. If you're a foreigner, why would you put your life savings in China? They can't even bail out foreigners invested in Evergreen for a simple $60 million. So why would you think that you could put your money over there and then actually think that in 5 or 10 years you're going to get it back? You might get the dividends, but when it comes to getting the actual original investment, it may just disappear on you. I mean, I can't even believe that the government over there would not help Evergrande and its investors. It's amazing. It didn't take billions. It only took like 26 million here and 30 million there. I mean, It was pennies. How can you? It would be like going to a bank and putting deposits in, and then they tell you that you can't get your 30 million out, but you should put more money in. Sure, you're going to want to put more money in. Yeah. All right. So from there, let's see where we're at. That was ruble. So from ruble, we'll go to yen. See what the yen's up to. It's playing around with this 5-year high. That's what that is right there, 5-year high. So right there. So and that matter of fact, they're basically identical, only a pip or two off. You know, we'll see what they do with this yen. You see, it's trying to go into a weekly sell as we speak. Let's put it up on J4X. Yeah, remember how Cyprus took people's deposits and turned it into stock? Not many people talk about that. Janos mentioned it. I remember saying that in one of the webinars. Janos was listening in. He's the head analyst for Dukascopy. And he was like, yeah, you know, a lot of people forgot about that thievery. But yeah, one day you have money in a checking account and a bank, you know, a savings account in a Cyprus bank, and the next day you own stock in the bank, and you're only allowed to sell so much stock every month. Yeah, sure. How nice of them, huh? That's the way I look at China. It's like the cockroach hotel. You can get in, but you can't get out. All right. From there, we go over to the Mexican peso. Let's see what the peso is doing. Let's see. Right there. And there's the Mexican peso. You see it's moving down, heading towards that bottom end of the range. Or at least trying. It's just really trapped in there. But you can see this stuff is really breaking down, and we close on a weekly sell. So there's a good chance. Today's what, Tuesday? So Wednesday or Thursday, we might find this thing much lower. We'll see how that goes, especially with it closing in the daily sell. Was that yesterday? Did it close in the daily sell? Let's see. Yeah, so yesterday it closed in the daily sell. It's unchanged today, but this thing's starting to break. So you might see a little waterfall like that down to these lows again. And that is the set of currencies we normally look at every day. So from there, we will shoot over to, let's see, where is it at? Let's see, we'll go over to, now we go over to the metals and the oils to get a flavor of what's going on there. So let's check out, we've seen what gold is doing. It's not really lifting up that well. Let's see what silver is doing. And there's silver there. You can see a couple greens for the last couple days. And let's see what it looks like on Chicago. Right there. Same thing. It was the spike from the invasion. And then what you have is, you know, it's still battling and trying to get going. We've been red. It's green. A little surprising there, but it'll catch up. And then you can see we are flirting with the weekly buy, though. That's interesting, and you can see how close the daily is trying to lift up over here. You see it's trying to do the same thing. It's coming to its bottom, and it's trying to lift up, just like our math is trying to lift up. So we're seeing that, you know, in other words, it's trying. And then you can see the hinkies are all pretty much just an enormous majority of green, whereas the last 4 days on Chicago we've been in red. And only one has been over the last 3 days in red. I figure that what you see is that the metals complex will go sideways up until they can get this situation resolved with Russia and the Ukraine. And I guess that's why we saw gold. Let's put gold back up there again. You can see here that gold was doing the same thing in the sense of it's trapped from the spike. Let's see if things get worse, it's obviously going to break through that area and take off higher again. You can see we're in that weekly buy from the 1840s and 1830s mid area, and then, you know, it's up $100 and some odd from it. Let's take a look at copper. That's the Mr. Inflation tool, it seems like to me. Still in the sell. Tried to get into a buy and failed yesterday, and you see it's trying to lift up a little bit here today. Lots of red. Let's see what it looks like over here on J4X. There you are. You see the action there. At the same time, it's pushing down. And let's see, what else can we say about that? We do have a green hinky, and you can see that it's trying to perk up. You can see it's trying to lift. It is lifting. I was going to grab my tea and have a sip. I'll wait a second. But you can see right here, it is trying to lift. It's an interesting product. It seems to be related to the inflation somehow. At least in my mind it is. I don't know. It just seems to be that way. Normally, copper is an industrial metal, and usually, in good economies, it goes up in value. In bad economies, it goes down in value. But it doesn't seem to be doing that with quantitative easing around. It seems to be doing a lot of different things. It is considered like the gold of China. So, just like silver is the gold of England, And so I'd imagine that could be a part of it. I mean, China, is always trying to do something for its country on some level, whatever it is. Doesn't necessarily mean it's good, but they're always trying to do something. All right. And that's that on the copper. And then let's take a look at platinum. There's April platinum. Okay, it's starting to lift off a little bit, but you can see here on the weekly, we're trading it under the zero line. It's 1.96, minus 1.96 right there. We're just minus 216. So it's just flirting with that. Maybe it bottoms and takes off and gets going. I guess, again, if the Crimea thing gets worse, it could. I guess I call it the Crimea thing, but now it's not the Crimea anymore. It's the Ukraine thing now. All right. And then from there, we'll take a look at the energy side of this. Let's see. And there is crude oil. That's, it's making, as I said, it's making a 8-year high here. And let's see what they're doing to Brent this morning. Where's Mr. Red? There it is. There's Brent oil. It's moving up too. Same thing, up to its highs, and the body of the candle is the highest it's been in a long while. So we're seeing a lot of action there on the upside. You can see our little white line is trying to break through and go into the buy. As you can see here, for the spot month, we've been in a buy for 3 days. Let me show you what the back month is doing. The June contract is just getting rolling along. Both are in strong weekly buys. They don't seem to want to really fall down. Just take a look at the front month again. Yeah, so in buys with no problem. And that's pretty much what they're doing with the oil itself for the vehicles. Now let's take a look at natural gas. Right there's U.S. natural gas trading at 4.4, almost 4.5 overall. And you see the little pressure that's been on right here. So natural gas is not feeling any real pain from this action, or vice versa. It's feeling weak out of it all. And then there it is, right there it is, here in the U.S. Just perking its head up a little bit. Widen this out a little bit. You see it's trying to get into the buy. And it's turned up, that whole angle thing. And at the same time, the weekly, which was flirting with a sell, seems to have stopped. And move that. And it's moving back up again. Interesting. And that is natural gas. Now let's take a look at European gas. It has gotten from a high of like 32 in a euro of it. It has fallen down to 22, like a 1/3 retracement, and now let's see where it's at. Yesterday it was at 23, which is not bad. I mean, compared to the action we've seen. Euro. It's here somewhere. Natural gas euro. There it is. It's trading at still in the 23s. You can see it's perked up, getting towards the top end of the range. Would like to see this thing curve again and head that way. And so we're looking at the. Let's see what we have. There's April gas. We're seeing our April gas. The weekly is trying to turn down. It's in a daily sell throughout this whole little adventure here, and so it's definitely we're seeing less pressure on it, and we've gone through. I mean, we're seeing a lot of cold all-time cold records being broken here in the United States. So that is interesting, to see this go on and see all-time low cold in the United States. This is like we're in a 10-year. I think we're in a 10-year low of cold. In other words, we're breaking down dramatically, and some places are seeing all-time records in the cold temperatures. We've got this global cooling thing going on at the moment for the last 10 years. When you watch the NASA charts before they are put out by other entities, people take them and then they present them with their idea. You can see record cold temperatures around the planet. All right, from there we go to, let's see, that was gas, so that's European gas. Let's hope it stays down there. It makes life a lot easier for a lot of people. All right, from there we will jump over to the stock indices. Let's see what they're doing. So we'll go to the Nasdaq 100 to start off with right there. And that's referred to as the Tech 100 in some places. That's the official name of it too, the Tech 100. It's the Nasdaq Tech 100 right there. And you can see green's the last couple of days. It's at the top end of its range. You can see we've tried to roll over here a little bit. And we are, as we speak, flirting with the weekly sell. Now, just to give you a little flavor of that, let's see, we go like this. And right there's the intraday of it. And it's trading down 84 points for the day. And this is just a Tesla and a half, I think. Let's see, what's the read? What is this? This is a setting. I'll tell you in a second. Right there, setting. Yeah, it's a 1.396. So it's a 2.23 Tesla. So we Fibonacci the Tesla points. So it's a 2.23 Tesla time frame. And you see, when it goes into a buy here, it finds a way to lift up a little bit in there, and then it goes into a sell here. It finds a way to go down, and it goes into a buy right there. See, it goes up. Buy here, it goes up in value. Sell there, it goes down in value. See, our math usually is a head start. See, it goes into a sell there. Gets pressured down. And so that's the Tech 100. Now let's drift over to the S&P 500. We'll take a look at that. Where are you at? S&P. There it is right there. We'll go with, this one is a Tesla 1.618 Tesla, I believe it is. And you can see here, it's moving up. No, I'm sorry, it's down at the moment, down 25 points. You see it's moving up at the moment as it went into that buy there. Right there, it goes into the buy and it battles its way up. Obviously, when it went into a sell, it battles its way down. It goes into a buy here, it battles its way up. It goes into a sell here, it battles its way down. It goes into a buy here, it battles its way up. It goes into a sell there, it battles its way down. See here, it goes into a sell here, it battles its way down. It goes into the buy, it battles its way up. So if a math will be that accurate in an intraday basis. It's going to be that accurate on a daily basis, at least in my head and my history. All right, now from there we jump over to the daily. Let's take a look at the daily in the S&P 500. And this is the this stock index is the S&P 500, and out of the 500 stocks, over half of them are foreign companies. So it could be Siemens, it could be Royal Dutch Shell, it could be British Petroleum, it could be Volkswagen, you name it. It could be a foreign company, and so that's how it usually works. What is this? Okay, and so that's where we are with the S&P 500. You see it's now down 28 points. Before, when we looked at it, it was at 25 points. So it's moving fast, and we went into the sell-off of this one. So obviously there's going to be downwardly pressure. That's the way it usually works. And we'll just watch how the lines come down and they dance and play underneath the manifold, and then it'll start to bounce back up again, and it'll find a way to start to turn up again from whatever point it is. And that's what we're seeing. Oh, you're not seeing it there. Let's do that so you can see that again. There we are. No, not there. Right there. There we go. And so you can see here it went into the sell. Right there. Oh, let's do this. Let's widen it out for fun. There we go. So I'm into the sell 4 bars back here, and it's doing its thing down. Ta-da, ta-da. All right, from there we drift over to the Dow Jones Industrial Average right there. And you can see this is down 236 points as we speak. Let's take a look at it on a daily basis. Let's take a look at it over on J4X. Right there, Dow Jones Industrial Average. You can see it's trying to lift up. 3 days of green. You see same situation right here. Trying to lift up. 3 days of green. Bing, bing, bing. See the 3 little dotties. And you can see the weekly had climbed into a weekly buy last week and is now flirting with the weekly sell from this pressure. And you can see our daily is aiming down. Hasn't hit the 0 line yet. And the white line hasn't pierced its dashed line, which is like a 3-dimensional 0 line. All right. From there, we're going to jump over to the Bitcoin. And we're going to talk again, like we did yesterday, about the XLF and the Bitcoin. Let's see. So we go. There's Bitcoin. It's been spiking up the last couple of days, which is nice. Let's show you what it looks like over here. Right there. Spiking up and trying to climb into a weekly buy. It's been a daily buy for 4 days now. And you see the same type of action over here. And let's see, what else can we say about that? So yesterday we were exploring the idea, as I started off the webinar today talking about it, how the cryptos are a new asset class. Totally distinct, totally different than previous times of banking that is influenced and controlled by the central banks and the finance ministries and so forth, and the central banks and U.S. Treasurer and so forth. In this case here, or the SWIFT banking system. In this case here, cryptos are a class of asset that's basically a financial asset that it moves around the old-fashioned system or the older system, and at the same time, so it forces it to look like a currency at times because people can move it around like it's a value. It's a very volatile value when you think about it. I mean, it makes it's like the way the Turkish Lira was flying around for a long while. I mean, no more since, I guess it's like 3 months ago, it was trading at close to 70,000 in value, and now it has drifted as low as 32,000. So that's over a 50% drop. That's like almost a 0.618 drop. And then now we see the product trading at 44,700 basically. So, you know, that's literally now it's bounced, I guess, a 0.23 up from its lows. So it's a very tough product to try to think that if you're going to use cryptos, it's more of an asset. You have to think of it like an asset. You got to try to hedge it like an asset, but not like a currency. You don't really want to hedge it like a currency because it's a very volatile currency, and so you know you're going to pay high premiums or let's put it this way, it's going to be higher premiums to try to hedge it. You can hedge it. There's no problem doing it, but if you have to, if you're that desperate to be invested in it, then you need to hedge it. There's no doubt about it because, you know, can you imagine stepping up for, they said it's going up the last couple of days because of the bank SWIFT clearing system being kind of removed from certain people, you know, over in Russia and the Russian Federation and so forth. So, you know, due to that fact, it automatically puts pressure on the crypto because it's an asset that has the ability to basically function like a asset. You know, I mean, that's really what it is. It's not a currency, it's an asset. And that's pretty much the way to look at it. Now, we were looking at yesterday when we went into that litany, we started looking at the financial stocks in the United States. You know, and I guess you could say, you know, the S&P 500 finance index. Let's see if we can put that up on here. Let's see, where's it at? Not there. That's the ruble. Okay, so we go like that. So it must be right here. Let's see. Yeah, there it is. And let's do this over here. So there is the XLF. Let's make that a little bit bigger since we're really talking about it a lot now. And you can see this is going back to April of last year. And then let's see if we can, let's see, where's that? Right here. If we move this over like so, and try to move this over like so, and then we can try to go look at April of last year. You're going to see a lot of same type characteristics. Making lows here in the July-August area right there. So that's showing. So let's say July. I'm trying to find the date there. Yeah, July. There's July. There's the lows. We had the same lows over here, and it rallied up. Now, it went to something like, I think, let me go look and see when the last time this product had been that high. There's no doubt when you look at the Bitcoin, this is where it hit the 70,000 or 69,000 area. So you can see here, you know, this product went from 36 to 42, 41, just barely 41, just right around that area. So that was a $5 move, which is like a $5 to a $36 move. That's something like 14% move. And this product here, over the same time period, it went from, I mean, it's not correlated percentage-wise, but it's definitely showing the same trend. So it went from the 35, 36,000 area to the 70. So it went like a 50% move, or, you know, 47% move. Big move. Now let's see, when's the last time the XLF saw the 41 area? So I'm going to go to another chart and see where it jumped out and show. Let's see how long. We'll go back and look at a 5-year period. I'll tell you if it did that. Obviously, you can see that yourselves if you're looking at XLF ETF. Okay, so we go to the chart here. Let's see what 5 years looks like. Yeah, see 5 years, it hadn't been down there. It was as low as 23. And we go to the maximum of it. That was, I want to say, since all the way back to '99. Even then, it wasn't there. So that move that got it to 41 could have been an all-time high. Let's put it this way: it was a 23-year high. That's for sure. Okay, or 22-year high. That's for sure. We know that for sure. I think the product's been around since the early '90s at this point. So I think that's a lot to be said. When you really think about it. Let's see if I can change this to a weekly. I guess it does that on its own. All right, so it was at a 23-year high or 22-year high then. That's a lot to be said. So you can see Bitcoin and the XLF found literally enormously long-term highs and all-time highs at the same time. Now, that says a lot about the product. It really does. Let's see. Where are we at here? All right, so we've run out of time again, but it's something we want to keep on exploring here and trying to understand. Let's see if I'm going to work on seeing if I can find some indications of telegraphs, in a sense, telegraphing. Like you can see here, we jump up into the buy. Let's see, let's widen this out. Oh, that doesn't do it. Just does it right here. You see we jump into the buy off of this low, and that was there. Now that's interesting, is that 4 days ago it was a low, and it was playing with the low of a month and a half. In this case here, it failed at it, and it didn't even take out this. These are hinky, so they're averages. Anything's possible. It may not be as clean, let's say. Matter of fact, when we go and look at Bitcoin over here, let's see, does it look a lot like it? It does look a lot like it when we're looking at the actual, not the average. Right here, you see the 4 day back, and then the same situation here, just as we had right there. They look a lot alike, playing with the same lows. So it's just something that has appeared out of conversation yesterday about cryptos that has me now thinking we need to follow some of these other situations. In other words, in this case here, you can see it's in a weekly buy, I guess all the way back to here. Whereas, cryptos are going in and out, and they're in I think they're in a weekly buy right now. Where's that? Yeah, they're flirting with the weekly buy. It was back here in a buy and then fell down. There's going to be a lot of interesting things I'm going to dig out of this. I think we're going to definitely mine a lot of data out of the XLF and see how we can use it to correlate with cryptos. All right, anyhow, this is Doc from North America. We will catch you all tomorrow on Happy to Hump Day. Our prayers and wishes with the Ukraine people. And they're rallying the stock indices over here back up. So we'll leave you with the picture of the stock indices. Where are they? Right there and right there. Yeah, you can see they're all rallying up. Now, this index, the S&P, was down 29 points. Now it's only down 11. The Nasdaq was down 85. It's only down 36. And the Dow Jones Industrial Average is down 110, 11, 12, which was down 240. So something is brewing there. Maybe we had a data point come out. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, be safe, be smart.